Aotearoa, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. The world is awash in better economic news in many of the world's largest economies. First, however, the overnight dairy pulse auction of the two key milk powders brought more weakness. The skim milk powder price fell another 0.5% from last week's full auction, but as the New Zealand dollar is rising, it was actually down 1.6% in New Zealand dollar terms. The whole milk powder price fared worse, down 3.6% on the same basis in US dollars, down 4.2% in New Zealand dollars. This is not a good trajectory. In the US, there were some key labour market reports out today. First, the weekly ADP private payrolls report for last week recorded a small 5,000 gain, which follows 5 consecutive weeks where they recorded more than 27,000 job losses. And the catch-up in the JOLTS report for October showed little change from September, but job openings were a little higher than anticipated for both months. And the widely watched SME sentiment survey from the NFIB was marginally better than expected, up slightly from October, but just back to the levels it has been since May, although that leaves it at a slight net negative. Interestingly, the retail Red Book survey eased back a bit last week to the average rise it has recorded since later in 2023, which mirrors retail inflation that is juiced by tariff taxes. It is perhaps an indicator that the Thanksgiving seasonal retail season was not as strong as hoped. And there is more evidence that Trump is just plain dumb. After his failure to get the Chinese to buy US soybeans at scale, he's rolling out a $16 billion taxpayer support for some farmers, which will actually be very little for most. Now he is threatening swingeing tariffs on Canadian fertilizer imports of potash, oblivious that even if that blocks cheap Canadian imports, it will leave higher-priced local product, with a net loss for farmers probably exceeding that $16 billion. Even a high school economics student can see the flaws in this approach, which embeds higher costs for Americans. And Trump has also handed China a huge AI chip win, agreeing to let NVIDIA sell its best stuff to China. This will allow China to close the gap on the US AI advantages much faster now. The US security community is gobsmacked. China may not buy a lot, but it does give them access to the technology. In Japan, machine tool orders were strong in November, up 14.2% from a year ago, continuing expanded growth over the past 7 months. But domestic demand actually fell. It was foreign orders that were the star here, up by 23%. Next week, there will be an important central bank meeting in Tokyo. Overnight remarks by the Bank of Japan's governor seem to set the groundwork for another rate rise on the basis that inflation is embedding, especially wage inflation, and that risks of deflation there are receding on a permanent basis. Japanese long-term interest rates are now approaching 2% and a 20-year high. Taiwanese exports were exceptionally strong again, as we've come to expect. They surged 56% in November from a year ago to a record $64 billion, up from a 49% gain in October, and again better than market expectations for a 40% rise. It is strong global demand for their chips and AI technology that is powering these amazing results. And German exports also rose in October, a surprise because they had risen strongly in September and a small correction was expected. We get US export data on Friday, and in contrast to Germany, Japan, Taiwan and China, they are currently expected to show a retreat. In Australia, the RBA kept the cash rate on hold in Tuesday's review, as expected. Their review was slightly more hawkish, firmly focused on the upside risk to inflation. And that is what financial markets reacted to, with bond yields rising as a result. And staying in Australia, the NAB Business Confidence Index slipped in November from October, but stayed just positive, although it's the weakest reading since April. This survey showed business conditions softened after declines in sales and profitability. The US Treasury 10-year yield is now at 4.17%, unchanged from yesterday at this time. And the price of gold will start today at $4,217 an ounce, up $26 from yesterday. And we should note that silver has set a new record high, over $60 an ounce. And American oil prices are down $1 again at just over $58 a barrel, while the international Brent price is now just under $62 a barrel. Analysts are now saying a super glut of oil is on the way, and downward price pressure will rise from here. The Kiwi dollar is now 10 basis points firmer from yesterday, now just on 57.8 US cents. Against the Aussie, we're essentially unchanged at 87.1 Australian cents. Against the euro, we're up 20 basis points at 49.8 euro cents. That all means our trade-weighted index starts today at 62.1 and also up 20 basis points from yesterday. And the Bitcoin price starts today at $94,444 and up 5.1% from yesterday. Volatility of the past 24 hours has been moderate though, at just on plus or minus 2.4%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.